button there that says live. Are we good? Are we rolling?
Yes, I just went live on StreamYard.
All right. What does that say? Good morning. Good morning. How's everyone doing today on this nice Saturday morning? Of course, there's a breeze in Brigantine, so all our stuff is flying this way. So if you see us scrambling around a little bit, that's what it is. But today I am here with our lovely team member, Joanna Driscoll, and we are so honored to have Jim Malamut here from Greentree Mortgage to talk a little bit about mortgages, a little bit about renovation loans. So first, I want to welcome everyone. It's a week after Memorial Day. It's not as busy as it was last weekend. Last weekend, it was like we were watching a tennis match. We were sitting here, and there was so much going on when Matt and I were here. Lines out the wazoo for Soulberry and the Sunday Tea House. A little more quiet this week, a little bit. So if you can't hear us, let us know. You can chat. Wherever you're watching this, you can chat and ask us questions, and we can answer your questions. We are live on Instagram. That's going to go. It's going to turn off in an hour. We have 600 followers on Instagram. If we get over 1,000, it'll let us stay on longer. So if you're not already following us on Instagram, go to @ShoreHouseTeam and follow us. All right. So Joanna and I were talking this week about selling a home. We are at the top of the market right now, and everyone is calling us about it's time to sell the home. So as we talk to people, they ask us a lot of questions and they ask for our advice. So when Joanna and I go in and talk to them, they say, please look at the house and tell us what you think. So usually we talk about staging, and Joanna is excellent at staging. We also talk about what items can be fixed in the home. We talk about the possibility of a pre-home inspection where, they would have an inspector come in so there's no surprises when the home inspection comes in. And then the last thing we ask our sellers is, if you were to stay, what would be the next thing that you would fix or renovate? And, sometimes we're scared to ask that question because then they're like, well, if I fix it, I'm going to stay. It happens. They like it. And then, so first, we want to talk about that. If they did stay, or if they wanted to do an addition or a renovation, Jim, what would be the best way for them to go about that?
All right. So first, thanks for having me. I appreciate it very much. Right now, if you own a house and you called me up for a mortgage, typically you have a low interest rate already, and you don't want to touch that interest rate. So I'd say most people that are calling up nowadays, they want a home equity loan. They want to take out a home equity loan for repairs, $20,000, $100,000, whatever the number is. And that's, the hot thing in mortgages right now is home equity loans. So we do those. The interest rates are higher than our normal cash out refinances, but you don't have to mess with your first mortgage, and you get a nice, get the money out to do the repairs. So that is what we hear most of the time. Now, you can do a refinance too, take money out for, if you're not eligible for a home equity loan.
Okay.
We have some people with lower credit scores, whatever reason, they're not able to get approved. And they can do a cash out refinance as well, where they take the money out and just refinance their first mortgage, take the higher interest rate nowadays, and are able to take the cash out that way. Now, if you're not planning on staying in the home that long, it's not the end of the world, right? Yeah. Because if you're only going to be there for 3 to 6 months, you can pay that higher interest rate for that time. Right. So it's not a big deal. But that's what we're seeing for people like those in those situations that are trying to do the do the repairs and then possibly sell the house or maybe even stay in the house.
What's the interest rate right now as of yesterday?
So if you're buying, I would say 7% is about where conventional rates are right now.
Okay.
If you put a strong down payment, you can get under 7%, 780 credit scores.
Okay.
But average rates around 7% on the conventional 30-year fixed right now.
Okay.
So they're a little up, but it just, I think people are more accepting of the rates being high. Everybody hopes they're going to go lower, and they can always refinance when they do go lower.
Right.
So there's always that. We date the rate, marry the house.
Yeah.
Right.
Yeah.
But we want to talk about the renovation loans too.
Yeah, absolutely. So that that leads right in that if you're buying a house that needs renovations, there's a renovations loan program. That's specifically why we asked Jim to come here today. Go ahead,
All right.
Jim. Take it
All
away.
right. So I brought my notes for this one. There's a lot.
Okay.
There's a lot when it comes to renovation
Okay.
loans. So, and I didn't want to miss anything. And on renovation loans, I'm not going to lie, they're a lot. It's very involved. There's a lot of red tape from the bank. You know, my honest answer is if you can avoid it, try to avoid it. Okay. But if you have to do it, it is what it is. You know, if the house needs repairs, if you don't have the money for the repairs, you know, that's what this program is for. But if you didn't need to do the renovation loan, if you had the money, I would strongly advise you not to do the renovation loan. Is my honest answer, just because there's a lot of red tape.
Okay.
Okay.
Yeah.
We are a bank. We're loaning you money, and they like to go into every single detail.
Okay.
Okay. And that's what I'm going to try to talk about right now. So the loan that you're going to hear most about when it comes to renovation loans is FHA 203K loan.
Okay.
All right. Which is for
Yep.
primary residences only. You know, you have to have at least a 620 credit score. You know, minimum, I would say 60 days to close, because it's just more involved. You know, we have to get an itemized list from a contractor who's also licensed and insured, and they have to itemize out every single repair that's going to be involved with the renovation loan. So it has to be itemized out by material and labor.
Okay.
Okay, so that's the biggest drawback is these contractors. They're out doing work. They don't want to do this paperwork that we're requiring them to do.
Yeah.
Yeah.
You know, so
Yeah.
that's the biggest holdup with these loans, is trying to get the contractor on the same page. Now, if you go over 35,000 in repairs, you have to do what's called a full 203K. If you do less than 35,000, you can do what's called a streamlined 203K.
Okay.
So the streamline's a little bit easier. You know, there's 2 draws, one up front, one at the end when all the work's done, and that's for less involved work. You can't do any structural work, nothing like too crazy, I would say.
Okay.
You know, but like a roof or, you know, kitchen needs some stuff, you know, that would be fine, but you can't do an addition or something like that.
Like your cosmetic upgrade.
Exactly.
Okay.
Okay, so that's the streamlined 203K. The full 203K, you need a consultant involved. Okay, a consultant actually comes, meets with your contractor, and is going to go over every single renovation repair that you're going to do, and make sure everything is needed, required. You know, make sure nothing gets missed. And he or she will kind of quarterback the whole thing from start to finish.
Very cool.
Okay, so it's an extra cost. Okay, but I think it helps the process stays on, you know, the right
On track.
path.
Yeah.
Exactly. So you have to get this consultant involved. There's a draw schedule. You can't do any luxurious updates. You can't just go put a pool back there.
Okay.
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 But if your pool needs to work, you could do that.
You can fix it up.
Okay.
Right,
And then,
okay.
Yeah, get it going.
So you know, these are the workarounds, I would say, for these kinds of things.
Okay.
But you know, it is very involved. You know, consultant. Let's talk about some numbers real fast.
Sure.
All right. So you have to put 3.5% down, but that's on the combination of the sales price and the repairs. Okay. So that's what I was kind of talking about before. You don't have to put so much money out. All you're putting is 3.5% down. So if your sales price, let's say, is 300,000, your repairs are 50,000, you can put 3.5% down on the 350.
Okay.
Okay. So instead of having to put 50,000 out repairs, all you're putting out is put $15,000 or something. So
Right.
it's a lot less money out of your pocket. Like I said, there is a draw schedule. All the repairs have to be done by a licensed and insured contractor. That's one of the biggest things. It's really difficult to do it yourself. You know, I get a lot of people who call and they want to do the repairs themselves. That's not possible unless
Dating one contractor that just runs the entire
yes.
job.
That's
Okay.
that's the easiest thing. If you get a general contractor to kind of be your one person, and then he's going to sub it out how he wants.
Okay.
Otherwise, you have to get the license and insurance for every single contractor involved, and that's
Okay.
when it can get crazy.
Okay.
So you don't want to do that. You want to get one GC who's going to kind of quarterback you through that part, and then
Okay.
you have the consultant on the lender side to quarterback you.
And
Now,
how does it work with appraisals?
great question. That was my next thing I was about to get into. So you can actually go up to 110% of the value.
Okay.
So
Okay.
using that same example, all right, where you were going to have a $300,000 price, 50,000 in repairs, so a 350 total. Your house only has to appraise for about 320,000.
Okay.
Okay, you can go
Okay.
110% of the value on this. So Oh, we got a surprise guest here.
We do have
So,
some minutes here.
Now I want to talk now. There's a contingency too. So if you, again, let's say your number's 50,000, they're going to make you keep an extra 15% in case you go over on the repairs, so that you have more money in your budget.
Well, because you always go a little bit
Always
over.
go over.
We always like the
Prices go up.
nicer
Exactly.
Pick out the
You
nicer
start,
tire.
Right.
you start, all of a sudden you find another repair that needs to
Yeah.
be done. So these are the problem, or excuse me, these are, what happens when we see these renovation loans. So they require 15% extra in case you go over. Now, if you don't go over, that money just gets applied to your balance at the end. There's a
Okay.
reconciliation done at the end. Because you may not use all that money,
Yeah.
but you may go over, and at the end they kind of reconcile all the money. Whatever's left over gets applied to your balance. And then a lot of times people refinance afterwards
Okay.
when they're done, because now they have some more equity. They can go from the FHA loan into a conventional loan, get rid of the mortgage insurance.
Okay.
So, that's what we see happen a lot with these renovation loans.
Okay. And you said this is only on a primary?
Only on a primary residence.
Okay.
Exactly.
Okay.
There's a lot more restrictions. If it's a second home or investment property, you
Okay.
got to get a true construction loan for that.
Okay.
You have to go through a bank. You're not going to go through a mortgage company.
Got it.
Yeah.
Okay.
Yep. So, the pros of a 203K, you got
Absolutely.
instant equity, less competition to buy. There's these foreclosed houses out there, houses that need renovation. Right now, the market's so hot still that if you're buying a house that's hot, you're not going to be able to do a renovation loan.
Right.
And it's less money out of pocket.
Right.
The cons, the downsides, it's more red tape. You're going to deal with a lot more paperwork, time consuming. But the biggest thing with the renovation loan, you have to be patient.
Okay.
All right. I stress patience, because it's not going to be easy. There are going to be challenges and hiccups that come up.
Okay.
And then one last thing, if you do any paint work, you have to have a lead, and the house is pre-1978.
Right.
Your contractor must have a lead-based paint certificate.
Okay.
So that is a huge holdup with these renovation loans, because not many contractors have that certificate. I think it's becoming more popular now in the last year or two, because the state's requiring all this stuff with lead-based paint going
Right.
forward with inspections.
Right.
But in the past 10 years, if you wanted to get somebody with a lead-based paint certificate, it was not an easy task.
Mhm.
You would have to literally have the contractor go take the class just so they would be eligible to do our loan. So, that's what there's a lot of red tape. Those are the negatives, but there's a lot also positives.
So, yeah, it's an option.
Exactly.
For some.
It's a good option for people who really want to buy a house that needs repairs.
So most of our houses here in Brigantine are a little more expensive than 300. Is there a limit on the cost of the house?
So with the FHA loan, it depends on how many units it is.
Okay.
In Atlantic County, you can go up to, I think it's like 498,000 right now.
For a single family home?
Yeah.
And if
Not
it's a
too far
duplex?
Duplex, on top of my head, I'm not sure, but I'm gonna guess like 700 range.
Okay.
Yeah.
Okay.
Yep.
There's a few duplexes on the
Yeah,
island that
so it
this
could
would be
be an
perfect
option
for. So then they could live in
that.
one,
Yep.
rent the other.
Yep. And you can
Um,
use the rental income to qualify,
use the
and all
rental
that stuff.
Wow, that's a
So-
great
Mhm.
option for somebody.
Absolutely.
Because sometimes the duplexes, people rent one and they're not in as good shape.
Yep.
So when you take it over as the buyer, you have to fix one,
Right.
right? One is always nice, and always a little not
Exactly.
so nice.
You got
right,
tenants who are
Joanne?
living in there. They beat it
Right.
up.
They beat it up. So this is a great option for that. And I love that you talked about, the fact that you could go into this and then refi out of it.
Exactly.
How long is the time frame before you could refi out of it?
There's no restriction.
Okay.
You have 6 months to do the work.
Okay.
That's the biggest thing. So after you do your 6 month, or after you do your work, you can technically refinance at any time.
Okay.
Yeah,
Very,
so it's
very
like
cool.
the same thing as right now. If anyone's buying a home and financing it, they're probably thinking that down the road they're just going to refinance. So if they get into this renovation loan, they can down the road when it's all done and rates
Exactly.
come down, they can just refinance.
And rates
an
will come
option.
down someday. I
Yeah.
don't know when that's going to be. It might be
Hopefully, right?
Yeah.
next year, 3 years, 10 years, but they will come
Yeah.
down a little bit at some point.
Okay.
So, I'm confident on that.
All right, we are here for questions. If you want to put anything in the chat box and ask any of us any questions about whatever, we're here to answer your questions. We are live, like I said. If anyone wants to come down and talk to us, we are here. We're right at 1012 West Brigantine Avenue at our Soleil Sotheby's office. And Jim, tell me a little bit about your company.
Sure. So I work with Greentree Mortgage. I've been with the company for 9 years. I've been doing mortgages now for 19 years.
Yep.
Goes fast.
Yep.
But Greentree is a great company. They're small.
Yep.
You know, they're local. The corporate office is in Gibbsboro, New Jersey.
Okay.
You know, all the underwriters, processors, everybody lives in South Jersey.
Okay.
You know, so there's a local family feel to the company. You know, we're small, and that's why I like being there, because we get stuff done.
Right.
You know, that's really what it's all about, is getting loans to closing.
Right.
You know, if you can't close, you know, you can put all the bells and whistles out there, but if you don't get the loans closed, it doesn't matter. And that's what they do.
And don't you work with family? Isn't it a family
Yeah.
business?
Well, my dad,
Okay.
you know,
I knew you're. Yeah.
I started
think
working
your
with.
dad was.
I
did
worked with
my
your
first
dad.
mortgage
Yeah, that's
back
what I
in
was
the
thinking.
day.
I worked with your dad.
Yeah,
go
so
ahead.
my dad got me into the business. I'm very thankful for him and everything he ever did for me. You know, he started back in like 1987 with mortgages. I started in 2005 working for him. He trained me. He passed away from cancer back in 2016, and now my brother works with me.
I thought so.
So,
I thought I saw
We
that.
keep the family tradition going. I got my brother working with me now. My wife works with me now.
Yeah. See, it's a family affair.
Yeah, I love working with my family.
Right.
We're all on the same team, and like I said, we're here to get loans closed.
Exactly.
You know what I mean? So we don't
Exactly.
fight ever. It's never like competition. It's always it's really awesome. So I love working at Greentree. I love my office. I have a great team behind me.
That's
So,
awesome.
thank you.
So
Really lucky guy.
our team is kind of at the point where you were when you started working with your dad. So
Okay.
we have a lot of children between all of us. They're all interning. They're all helping us.
Yeah,
They're all
that's great.
stopping by. Joanna was telling a story yesterday that she was out showing a house and she had her daughter on the computer trying to help her, like while she was driving. You know, like
And she found the
And
house.
she found
for
a
my
house.
clients as I was blindly driving to the next shore town, hoping. And she said, "Mom, I think they were gonna like this one." I called. I said, "Send me the number." I called the agent, and we did a walkthrough, and they put an offer in, and they bought that property. So
that's how
Yeah.
it starts, right? You
So
got
it
to
goes.
teach these kids young.
Absolutely.
Both of our children are in 8th grade,
Okay.
and both of them are like, "We need a summer job." And we're like, "Well, we have plenty for you to do." Like,
Yeah.
but no, you know,
We always need an intern. At
that's
Greentree
right.
Mortgage, too.
They're
Get rid of
okay.
us,
Very
so,
cool. Very
um,
cool.
But that's great. I starting the kids young. I have a 7-year-old. I
Okay.
always tell her she's gonna go do mortgages in
That's
20
right.
years. It goes fast. 15
It does
years now.
go
it does.
fast.
It goes so fast.
But yeah, it's I love what I do. I'm a very lucky guy. I love doing work. I love helping families get into homes. It's really a rewarding experience going to the I try my best to go to all my closings.
Yeah.
Because it's really that's when you create these relationships.
Correct. Yeah.
That's when you get more referrals going forward, is because people want to work with you. They trust
Yes.
you. They like you.
Exactly.
And that's how you create relationships face to face.
Yeah.
So I love going to closings and seeing it through, seeing
Yeah.
how happy they are at the end, and it's a rewarding experience, especially for first-time home buyers.
Yeah.
You know, that's what
We don't get a lot of that.
I know over here in Brigantine.
We're a different breed
exactly.
over here.
You're more second home.
We're a bit of a different breed.
Yeah, I've always been more first-time home buyer guy. That's always been our specialty. My dad going back to 20, 30 years. So that's what we specialize in, I would say, over on the mainland. But it's a rewarding experience. I brought some up. We do a lot of the grant program. I was going
Oh,
to talk about that real
please
quick.
talk
yeah.
about that.
So,
I
Yeah.
actually just had someone ask me about that
Yeah.
the other
Sure.
day.
So
Mhm.
New Jersey offers a grant where it's $10,000 or $17,000.
Hold on. This is
Sure.
where you listen up. Okay. This is the meat and potatoes, right? The little
There you
gift
go.
that Jim's given you today for first time home buyers.
First time home
Okay.
buyers, you can get $10,000 or $17,000 here in Atlantic County. And to break it down, $10,000 is if you're a first time home buyer and your parents currently own a home. So if you're on the loan and one of your parents own a home, you get $10,000. If you want $17,000, you're a first generation buyer. That means your parents, neither parent own a home.
Okay.
All right, so that's how you get the extra $7,000 if your parents don't own a home currently. You're a first generation buyer.
Okay.
It's a great, the states $17,000 can really get you into a house.
Oh yeah.
So
That's
That could be the
huge.
difference.
Yeah.
it's huge.
Can you do condos and
You
townhomes?
can do condos.
Okay.
You can do conventional with it.
Okay.
You can do FHA with it.
Okay.
It's a great program. Actually, we did USDA too recently.
Really?
So yeah.
I love USDA.
USDA is awesome, but so the grant, the biggest thing is, we have a lot of buyers who want it, But the problem is, a lot of our people want to go to the maximum they can afford, and we will allow a certain number, and the state allows a little bit less.
Okay.
So I will tell everybody, this is what you qualify for with the grant. This
Right.
is what you qualify for without the grant. And
Okay.
as long as that understanding is up front, it's pretty good. But a lot of people, they want to get the grant,
Yeah.
but then they realize that it might not be the best for them because the rates might be a little higher because the state sets the interest rate.
Mhm.
I
Okay.
have no control over
Right.
the rates
Right.
or fees when it's this grant.
Right.
So sometimes if you have like a 780 credit score, you're paying a higher interest rate than you would pay if you were not getting a grant.
Okay.
So these are things to consider. We can go over those options for you. But end of the day, it's a great program for first-time home buyers. You basically have $150,000 a year income. So that's pretty high, not so
Yeah.
bad for first-time home buyers. And like I said, you can apply that money towards down payment or closing costs, and it reduces what you need to close.
And that's again primary home,
Primary
Primary
residence.
and you could do a duplex though if you're living
You
in the
can do
house.
up to 4 units.
What a great
Yeah.
Yeah.
idea, right?
We've done a couple duplexes already.
And does the money run out? I know some of the Atlantic County programs, once it's gone, it's gone.
Great question. So the state has unlimited funding, from what I'm told.
Whoa, that's our
Um,
taxes. See,
Yeah.
New Jersey taxes at work right
They,
there.
they came to our first time home buyer seminar about a month ago, and they told us they are not expecting to.
Awesome.
So the county program, another great program, but their money does run out. A little more restrictive on income.
Right.
So that's why the state program is what everybody talks about nowadays when they talk about a grant.
And is there a limit on price of a home for that?
I think it's like 500,000, something
Okay.
like that. They just came out with a new limit recently.
Okay.
So it was like 480, and I think it's like up to 500 now.
Okay.
So pretty, and as long as if you have 25% in the bank of your own money, you can't do the program.
Oh,
So you
Okay.
can't. They consider you to be too liquid at that point,
okay.
and you are not eligible.
You have to spend your money first.
You have to spend,
Spend
your,
your
yeah,
money.
You have to spend your money.
could do
if
that.
you have 25% down, you're like, you can't get.
You
the
can't
grant.
get the grant.
But
Right.
yes.
Okay.
So if I have somebody who has 20% down, they're able to get the grant.
Okay.
So
All right. So they could do a conventional
They're
loan.
doing a conventional, not paying
Wow.
mortgage insurance. They're getting 17 from the.
17.
They're getting 17 from the
Okay.
That's
state.
huge.
That is
huge.
17,000 is a great amount.
The one drawback is you have to stay in it for 5 years.
5 years, right?
So
That's
5
not a
years.
That's not a huge drawback.
It's not a huge drawback, but I wanted to make sure everybody understands
Oh,
that,
yeah.
because that is one thing that people ask about. 5 years, you have to stay in the house, or else you pay the loan back. Worst case, you can always pay the loan back. So that's the drawback.
Okay.
So after 5 years, you could move out. You could use that property as an investment property.
Yep.
Roll your equity into purchasing another property, possibly move yourself in somewhere else, rent that house, and now that
Yeah.
money worked for you.
Exactly. You can refinance
And-
after the 5 years, take
Yeah.
cash out, use that for a down payment on the next house,
Yeah.
rent out that
Wow.
house. Exactly.
Okay.
So all those things are
Options.
definitely options. Yeah.
I love it. I think that's a great loan. I mean,
It-
great
it-
grant.
it's
a great
awesome.
situation.
I would say
Where was that when we were getting one?
I know.
My
I
first
did not
house,
get
I think my
17,000.
interest rate was 12.5%. I think I had to come up with, at that time, it was like a small little townhouse on the island, but that was
Probably
a lot.
20% down.
I had to I didn't have to put that much
All
down,
right.
but they didn't have any grant.
No,
There
yeah.
was none of that. I had to come out I had to work 3 jobs one summer just to get the down payment, But hey, we have options these days.
We do.
Can you do me a favor and talk a little bit about an ARM loan?
Sure.
Because what we are finding in our market
Yep.
is that because the interest rates are higher, our buyers are considering some other options. One option, they're putting twice as much down.
Okay.
So they're saying, okay, we would normally put 20% down and the interest rate used to be, for example, 3.5%. We'll just put double the amount of money down, pay the higher percent. Hopefully the payment is similar, so on and so forth.
Yep.
The second option they're saying is, Maria, we're going to go into an ARM
Okay.
until these interest rates come down.
So adjustable rate arms definitely make sense, especially for people borrowing more money.
Right.
If you're only borrowing 100, 200,000, the arm, you're not going to save as much.
Right.
But the more you're borrowing, the more you're going to save.
Correct.
On an adjustable rate. And typically you're saving about 1% on the difference between a fixed rate and an adjustable rate.
Okay.
It might be a little more sometimes, might be a little less sometimes. I would say 1% is like the average.
Okay.
So, if you're borrowing, let's do 700,000,
Yeah.
that's $7,000 a year difference that you're saving.
Yeah.
It adds up, you know, and
Yeah.
and typically
Yeah.
these adjustable rates are about 3 to 5 years, where you're in the fixed rate for the first 3 to 5 years, and then after 3 to 5 years it adjusts.
Right.
Okay, so you're in the fixed lower rate for 3 to 5 years. You're saving, let's call it $7,000 a year for the first 5 years. That's $35,000
Right.
saved.
Right.
All right, it's a lot of money.
Yeah.
And then after 5 years, you can see where rates go. You know, you can
Right.
always refinance during that time if rates come down.
Right.
You can say, let's say rates do come down. You can the adjustable rate will just go down.
Yeah.
You know, so it's not the worst thing in the world.
Okay.
As long as you understand how it works.
Yeah.
And I think, you know, people have this sour taste in their mouth about adjustable rates because of the financial crisis.
Right.
Mhm.
You know, but that was these different kinds of adjustable rates where you
Yeah.
didn't even have to pay principal.
Right.
You know, it was
Right.
like these negative amortization loans.
Interest only.
Right.
Yeah.
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 That was these negative amortization loans that really killed things, not the adjustable rates that killed things.
Okay.
Because people weren't even paying principal and they couldn't afford the payments to begin with because
Yeah.
they
Yeah.
weren't even documenting their income, all
Yeah.
that kind of stuff. So
Yeah.
instead people blamed the adjustable rates for it.
Right.
But
Hot mess.
you know,
Yeah.
right. And that was just one little part of the problem. You know, adjustable rates hurt, but that wasn't the real problem. The other things were the real problem. So
Yeah.
as long as you understand what you're getting into, an
Right.
adjustable rate makes sense, especially if you're borrowing more money. So we do hear, especially on the jumbo side, you know, if you're borrowing more than $766,000, that's a jumbo loan here in Atlantic County. And when you start getting in those numbers, we hear a lot of adjustable rate questions. And stuff.
Sure.
So
The other thing we're seeing here is people moving here from other areas to retire.
sure.
We're seeing a lot of that,
Mhm.
and they're coming in and they're buying the house maybe
Good
5
morning.
to 10 years before retirement,
Okay.
or they're buying it and still working and knowing that they're working from home or they're not going to be working much longer, and then they live here, which is wonderful. How does that transition when someone goes from working to retirement when it comes to a loan?
That's a really good question. So when you switch, it's like switching jobs almost. When you
Okay.
go from working to retiring, it's like switching jobs
Right.
and switching your income source.
Okay.
So we have to figure out what your income source is going to be going forward.
Okay.
Okay, so if you're retiring and going to get a pension all of a sudden, we have to wait till that pension actually starts
Okay.
to use it.
Right.
So sometimes there might be a 2 to 3 month delay. You know, if you're going to take money out from your 401k or a retirement plan,
Right.
you know, we have to document that you're going to set up a distribution.
Right.
Okay, and that's allowed.
Right.
But these are the things that we have to kind of get into
Right.
to make sure that someone's going to qualify for the loan.
Sure. And if they do it 10 years before they're retiring,
Right, if they're still working,
they're
then it's
still
easy.
working, you know.
Is that then it kind of just becomes, okay, is it going to be a primary residence or is it going
Right.
to be a second home? Because
Right,
everybody
right.
wants to do it as a primary
Right,
residence to get
right.
the better interest rates.
Right.
All right. So then it just kind of becomes, okay, well, are you moving from Pennsylvania to Brigantine and you can work from home, or are you an electrician in Pennsylvania?
Yeah.
You know, that's where
Yeah,
it
yeah,
starts
yeah.
getting,
Yeah.
you know, where we have to look into it more
Right.
and be the bad guy sometimes and say, no, this is going to be a second home. You're going to pay a higher interest rate.
What's the difference in the interest rates from a primary to a secondary home?
Probably like 0.5%. It's not the end of the
It's
world.
not the end of the world.
But people love, you know, people want to stay. You know, as they say, 0.5% can add
Yeah.
up. So, you know, if it makes sense, we would love to do it as a primary residence.
Okay.
That's the best way I can decide. But if it doesn't make sense, it is what it is. You know, everybody has a brain, right?
Yeah.
And we're all
Yeah.
going to use them for
Yeah.
these kinds of situations. But, you know, if it makes sense, we primary residence all day long.
Are you seeing people buying points to bring the interest rate
I
down?
do. I do.
Yeah.
I don't always recommend it because, like we talked about, rates are going to come down at some point.
Yeah.
Mhm.
So if rates come down, there's no reason to pay points because you're going to refinance,
Right.
and then that money you paid up front goes away.
Right.
Now, typically, when you pay a point, let's say it's about a 3-year payback period, where for the first 3 years you're literally paying back, like your costs are going back with your savings.
Yeah.
All right, because you're saving money every month by having a lower interest rate, but you're paid upfront
The upfront
money.
cost, yeah.
So it takes you about 3 years to get your costs back.
Yeah.
All right, after 3 years, it's all savings. So if you know you're going to be in this loan for 30 years, that's when points make sense.
Okay.
Okay, but if you think you're not going to be in it in 3 to 5 years, it doesn't make as much sense.
Got it.
So, but some people are very payment conscious.
Yeah.
You know, they want the
Yeah.
payment to be this number,
Right.
and they are willing to pay a point to get it to that number.
Right.
So everybody's different. That's why there's vanilla and chocolate, right?
Yeah.
You know, everybody has
Yeah.
different preferences. But personally, I don't like paying points up front because in today's market, I think rates are a little higher, and I think they will come down in the next 3 to 5 years, I hope. So
I heard it out of your mouth.
yeah, exactly.
If it doesn't, I'm going to call you, Jim.
Yeah.
Listen, you said
I don't know.
that rates are coming down at some point.
Well, you know, things do happen.
Yeah.
Elections have. You never know what's going to happen in the
Yeah.
future. So,
I'm hoping something happens. I don't care what it is. Something's got to happen to make this better.
but
Something.
So yeah, I do think rates will come down at some point. I'll put a bet down on it.
Okay.
In the next 3 to 5 years,
Okay.
rates will get under 6%.
Okay.
Well, I couldn't tell you when that. That's hard to predict.
Okay.
So,
Anything else you want to tell our viewers? How they get in touch with you?
sure, my cell phone is 609-432-2829 is the best
Keely, can
way.
you put that up there?
You can call, email, text me anytime. The only other thing I was going to talk about was condos.
Oh, please talk about
'Cause
condos. We have a lot of them.
I know there's a lot of condos in Brigantine.
There's like 8 up here above us.
And sometimes they can be more challenging to finance. So I just wanted to talk about that real fast and just understand that if you are buying a condo, make sure you want to get the condo questionnaire done as fast as possible,
Yes.
because if there's issues, you may need to put more down.
Okay.
Okay, so let's talk about second homes, because we're here in Brigantine.
Mhm.
Yep.
You can put 10% down and buy a second home,
Right.
right? But if it's a condo and it has issues, you may have to put 25% down
Right.
to get financing.
Right.
And same thing with an investment property.
Right.
Okay, 20% versus 25%, because Fannie Mae and Freddie Mac have these rules. If there's anything wrong with the condo, we have to go with what's called a limited questionnaire. And if there's anything down there, then we can't do it at all.
Yeah.
Okay, but a lot of the questions that are issues don't show up on the limited questionnaire. They show up on the full questionnaire.
Can you do me a favor? Because
Sure.
I don't think a lot of people understand this. So
Yeah.
they come down and they find a condo that they like, and they say, okay, well, I've been pre-approved from XYZ mortgage company out of Texas.
Mhm.
And they said that we're approved. And we'll say to them, look, you really need to speak to a local lender
Yeah.
or a mortgage rep, because they understand each condo. They know they've gotten these condo questionnaires done before.
Yep.
And they know which ones can get a mortgage push through, right?
Right.
For example, there's a condo on the island that has a left side and a right side. On the left side, it's very easy to get a mortgage. On the right side, not so
Yeah.
much. So what are some of the things that would prevent that would come up on a condo questionnaire that would prevent a mortgage from moving forward?
Sure. So structural repairs.
Right?
Okay, repairs is the biggest one nowadays, especially after the whole Florida collapse.
Yeah.
So they're very careful about that.
Yeah.
We got some more fans over
We
here.
got a lot of
Yeah.
fans.
So structural repairs is number one. If
Okay.
there's any litigation against the condo,
Oh,
if a homeowner sues or
Oh.
slip and fall,
Yeah.
stuff like that. Now we can get around that stuff,
Yeah.
but these are like, some of the bigger hurdles.
right.
If you have so many let's say, especially here in Brigantine, if you have people if more than 50% are investment property.
Right.
So let's say more than 50% are rented out, then you would have to put more down.
Which is
Mhm.
most of
Yeah.
Brigantine.
Most of Brigantine, exactly.
So hold on, say that again for the
So-
people in the back.
Now, this is if you're buying an investment
Right.
property only. Like if you're buying a primary or second home, this doesn't apply.
Right.
But if you're buying an investment property and there's more than 50% of the properties are rented out in that condo complex, you have to put 25% down to avoid the full condo questionnaire.
Right.
Okay,
So if there's 100 condos,
right,
51%
One of them, yeah.
are investment properties. You have to put 25% down to avoid the condo questionnaire.
exactly.
So, and again, our local lenders know which buildings these are. They dude down in Texas is not going to know
Yeah.
about that. And when do we find out about that? When dude down in Texas does the
Yeah.
mortgage?
And
Texas. Nothing wrong with Texas, but when a national company does a mortgage for somebody, we find out in the 11th hour.
Yeah.
We're a week from
And
settlement.
then we scramble.
Yeah,
And then
and they say we can't do it now.
Yep.
A week from settlement.
yeah.
So go ahead. I'm sorry.
No, and
No.
I'm just going to say, I always say this because there's so much that goes into helping our clients buy properties. It's not just showing them the property and then getting a contract out and crossing your fingers that you land it. There's so much, and I could talk about the contract process and negotiations and all that, but getting an entire A team together is like
Right.
So important. And that's your lender, your title company, I like to tell my clients, I have an A team that I work with. I send them information, contact information for those individuals. I know I send you people all the time. And
Yep.
I'm like, look, we just have to do everything that they tell you to do. And then when we show up to settlement, it's smooth sailing. There's
Right.
nothing that comes out in the 11th hour.
Exactly.
Where then I'm scrambling and I'm messaging Jim and like, how do we fix this? And then we try to fix it for our clients because I tell them you need to go with a local lender. It's so
You have to.
important because they just
Especially
know.
at the shore.
Yeah, they know the
Even-
market,
Especially at the shore.
the location.
You know where
the
I
short
run into
term.
problems like Wildwood.
Oh, yeah, exactly.
So in Wildwood, they have so many condos and so many townhomes, and sometimes we didn't even talk about this insurance.
Oh, yeah.
When you have 7 townhomes in a row, sometimes they're the most difficult, right? When you have 7 in a row and 4 of them are investment properties, and then they don't have enough money in the reserves
Oh, yeah,
to
that's
cover insurances, to cover flood insurance. You can't buy the house, the
Yeah.
townhouse. You can't buy it because unless you put more money down.
That's exactly. You have to
Unless
you have
you
to go
put-
get an exotic loan, essentially.
Exactly.
Well, I think we have a couple of places like locally, even like maybe Ventnor, where my clients wanted to purchase and they were told you have to purchase cash because they just won't,
Right.
a lender will not
Right.
finance it.
Yeah, that was-
Important to have a
Mhm.
good team, important to have people that know what they're doing, important to have local agents. You know, that's something else I keep saying on this show. I said it last week. I'm going to say it again. No offense to people that don't live here because I get it, but your local agents know so much about the island. They know what areas were affected by Hurricane Sandy. They know about flood insurance, right?
Yeah.
It was like we were born into it,
Mhm.
right? What is our biggest issue in the island? Everyone thinks it's flood. It's not. It's wind.
Yeah,
It's
the wind.
wind, you know. So a non-local agent may not know that. You know, they may not be able to consult with you correctly or advise you correctly. That's why we're here. Again, we do have an awesome team. And Jim is an extension of our
Thank
team.
you.
But we put a group of people together that we know can help you from A to Z. And when I say Z, that's well after settlement. We get calls constantly asking for plumbers, electricians,
Mhm.
and everyone that we work with, including Jim, is someone that you can get on the phone. It's not dude down in Texas, okay?
No.
So if you're a year in and you get a letter that says, for example, the mortgage was sold, right? That happens a
Oh,
lot.
yeah.
We're able to say, well, call Jim, he'll explain it to you. So you can get on the phone with Jim and he's going to say, here's what's going on. Here's what you have to do, blah, 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 blah. It's not an unknown. We do have a great team of people and we're fortunate. We're fortunate
And
to
I
work
have
with
to
people
say,
like
I
Jim.
have texted Jim on like a Sunday,
Yes.
and I say, I'm so sorry, but he responds right back and gets back to me. So
That's right.
line yourself up with individuals like that work for you, that pick up their phone on Sundays and holidays, after hours.
So
Always here for you guys.
thank you. So I'm afraid to ask, but I'm going to. We have a lot of changes coming up in July with the buyer,
Yeah, sure.
right?
Yeah.
So in July, the NAR is reaching a settlement or has reached a settlement, which essentially could have buyers paying for their own commissions. So the biggest question that has been coming up already is a lot of buyers can't afford our compensation. So the mortgage companies have gotten a little creative, right?
There's
A little bit.
a little bit.
Okay.
In my opinion, I think things are going to be very much similar.
I agree.
You know, I think things aren't going to be that much different. There's a
Right.
lot of nervous,
No, I agree.
news, but
Right.
in the end of the day, things are going to be very similar. The biggest difference is going to be now the buyer is going to sign an agreement up front with
Right.
their agent. Where
Right.
Before they didn't sign. You know, most
Right.
agents around here don't have a buyer sign an
Right.
agreement up front.
Pennsylvania, it's required.
Right. Here
Right.
it's just kind of like a trust. I show you. I'm going to show you a
Mhm.
house. I trust
Right.
that you're going to use me as your realtor.
Right.
Now you're going to have to sign this agreement because if you don't sign an agreement, I don't know what I'm going to get paid.
Right.
Mhm.
And that's going to be the biggest change. But like you said, I don't think buyers can afford the commission.
Right.
You know, it's really the seller.
First time home
Well,
buyers. can't.
Especially first
Especially
Yeah.
first time, right?
Especially
They just
first time.
can't.
Exactly.
So am I right in
So-
saying that there's some programs now that are going to be able to roll that into the mortgage or use a
Well,
seller credit or something like that?
So, in my opinion, like nothing's going to change. It's kind of like right now, you put it in the mortgage right now anyway, right?
Okay.
It goes into the
Mhm.
price anyway.
Right.
So it's
Right.
just going to be the same thing. You're just going
It
to
will be on
continue,
the buy side
It
instead
just-
of the sell side.
and it's just going to continue being in the price. It's just who's paying. Is the seller going to actually pay the
Right.
commission at closing, or is the buyer going to actually pay the closing?
Got it.
But it's still going to go into the price like it does now. It's still going to be basically financed by the buyer,
Right.
unless they're paying it out of pocket at closing.
Right.
And it's just a matter of how much does the buyer pay? Is he paying 1%, 2%, 3%?
Right.
That's going to be negotiated between the buyer and their agent.
Right.
And then they come and make an offer, and they're going to tell you what that
Mhm.
number is
Right.
before the seller said what the number was going to be.
Right.
So to me, that's the biggest change. But for the most part, buyers do not have the money. Down here in second homes, you may see more buyers with the money to do
Yeah.
it, especially on a competitive property.
Right.
I think on a very competitive property, that's where you're going to see that come up more.
Yeah.
But property that's been sitting there for a week or two and you only have one offer, you're not going to see as many buyers paying the commissions, my
Right.
guess.
Well, we appreciate the mortgage companies helping us through all this.
Mhm.
I have
Sure.
to tell you, I mean, again, partners, A team. We've had these conversations. What are we going to do? The mortgage companies rose to the occasion and said, "We're going to walk your buyers through it. We're going to figure it out. Seller's concession, whatever. However, we have to do
Right.
it. We're gonna figure it out." So we appreciate that.
Yeah.
Thank you, because we're all in this together.
It's that one thing that it doesn't count towards the seller concession.
Oh, okay.
So it's
I'm
separate.
sorry.
No, it's all good. But that's the thing. Like right now, commission and seller concession are separate things, right?
Right.
And it's just going to continue that way.
Okay.
So you don't if the seller wants to pay the whole 6% or 5%, they can keep doing that. And
Right.
they can still. What you can do is still have the seller pay the full commission, get a seller concession too,
Right.
and as
Mhm.
long as the house appraises for that number that's on the contract, you're good
Yeah.
to go.
They're getting more.
Right.
Right.
So as long as
You're
it,
baking it in.
and you're baking it in, just
Right.
like pre NAR, you're
Right.
gonna do the same thing post NAR. You're just gonna
Right.
bake it all into the price, hope it appraises.
Right.
And if it doesn't,
Love it.
then you got to figure out a plan.
Right.
So
Right.
that's really all it is. And I think so. There's a lot of
People are scared.
people are listening,
Mhm.
especially they should be a little bit, but I think everything's gonna be okay.
Well, at the end of the day, we were talking, we had a meeting, and at the end of the day, we're going to be compensated. We're not going to work
Right.
for free. Nobody would.
Exactly.
Nobody would. There might be some retainers that happen. We talked about that a little bit. But again, we just want to help people buy and sell houses. Like, we're all educated. Everyone on our team has been working for 10 years plus, most of us 20 years plus, like yourself. And, we know what we're doing. I know that a lot of buyers kind of think, well, I might be able to do this by myself. You probably could, but it's not going to get done right. I want to give a quick example. We had a buyer who did not do their title insurance correctly. And then they switched it from like one name to another and then found a title claim and it wasn't covered. Like we knew that if they did that switch that they had to do title again. They never did. They did a quick claim deed and it's like millions of dollars.
Wow.
Like we could have saved them all that aggravation had they gone through us. So, you know, don't be short-sighted. You know, we do know one or two things about selling houses at the shore. Anything else you want to talk about? Did you give your website?
www.yourbestinterest.com is the website.
Okay.
I think I hit most of the things. You know, the one thing we offer marketing help. I know you guys probably you're doing a great job with this stuff
Thank
already.
you.
But if you guys your realtors need any help with marketing videos, just any marketing, we're here to help.
Well,
we get creative.
we have a brand new magazine. It's a high-end magazine, Live, Love, Brigantine. And if you want to get an ad in here, you're welcome to.
Nice.
But these we are not sending out to people. They're very important. We are going to give one away. So the first person that's watching this and comes down is going to get one of our brand new magazines. It's only our fourth or fifth edition. But this is a high-end magazine with all of our team in here, everyone that we work with. There's some great articles about Brigantine and buying and selling homes. This one has an article that Joanna did on our new office in Poland, our new Sotheby's office in Warsaw,
Nice. Where I was born.
Yeah.
Wow, that's awesome.
Yeah. So we talk about the local businesses. We have some new businesses popping up around us, which is exciting in Brigantine. And so the first person that stops down and says they saw this, come and get your free magazine. All right. Well, Jim, it's a pleasure. Thank
It's
you
been-
so
It's
much.
been great being here. I appreciate you guys
Thank
having me.
you.
Thank you very much. And I hope you guys have a great, it's going to be a beautiful weekend.
Thank
so
you. Again,
enjoy
if
it.
you have
Stop by
any
the farmer's
questions,
market.
Oh, yeah?
Yeah.
All right.
if you have any questions for Jim, go ahead and put them up here. We will get them to him. His phone number is there. You can call him directly. And Joanna and I are going to stay on and talk a little bit about the market.
All right, guys. Thank you
Thank
very
you,
much.
Jim.
Thank you
Have a
so
great day.
much.
Switch seats here.
Yeah.
All right.
Can we have a commercial break, Keely? Jim, thank you.
Yeah, thank you
Thanks for
so
having me. That was a lot
much.
of fun.
Yeah, that was
Okay.
great.
So,
Yeah, stop by that farmer's market.
all right. Good. I'm going to do that. I'm going to hang out at the pool today.
Shout out
There
to
you
Sea
go.
Talks. My
Yeah.
daughter's making fresh squeezed lemonade
Oh, yeah?
over at
Okay.
Sea Talks. Yeah.
So for those of you that don't
All
know,
right, guys.
Brigantine has
All right,
one
bye.
of the
Thank you,
best
Jim.
farmers market. It's run by our green team, which is an extension of the city. And last week there were over 5,000 people
Wow.
went through the farmers market between 8 in the morning and 12. And I'll be honest, we actually were considering, should we have our show on Saturdays at 10 o'clock, but we're just as busy here. So what we might do is we might go down there and do our show a few times. I think that would be fun. Maybe not 4th of July,
No.
but go down there
Come on
and
a
go
Saturday.
live from the farmers market so you can see everything going on. Talk to some of the vendors down there. Our Chamber of Commerce is down there with their trailer. Shout out to everyone down there hustling, right? They're all
Yeah,
down there
they're all
hustling. You
down
can go
there.
down there and get clams. You can get tomatoes, fresh basil,
Clam Daddies,
the sea
Lily
pops, you
Dove
said.
and her jewelry.
Oh, yeah.
Divinity Rocks.
Yep.
Beautiful stuff.
I love her
That's
stuff.
right across from Sea Talks.
Yep.
So you can get your lemonade, get yourself a necklace or some earrings.
Right.
Get some clams.
Love it.
Yeah.
Love it, love it, love
radishes
it.
were delicious last week. I did go and I got
Did
some
you?
radishes. Yeah.
I like the flowers. I
Yeah,
usually
they
get the
have
fresh cut
beautiful
flowers.
flowers.
They're wild
Mhm.
flowers. I love them. So a few other things we do want to talk about the market. We are absolutely seeing a change in the market. Okay. We are at the top of the market. It's starting to come down. Now, are the prices coming down? Yes. Let me explain how this is happening. So everyone is putting their houses up at the numbers from last year or maybe pre-February, I'm going to say, right? And now we're seeing price reduction, price reduction, price reduction. They're not flying off the market. Our days on market have gotten longer. If something used to be on the market 30 days, 45 days, now it's 60, 65
Mhm.
days, 70 days. Every month it's going up. So if you are thinking of selling, a lot of our owners are saying, I'm going to sell at the end of the summer. If everybody does that, it's going to oversaturate the market and all of the prices will come down. So
Yeah.
what we are explaining to our sellers as we consult with them, do it now. Do it now. Get it on the market, get it off the market.
Yeah.
You could settle in August, right? We could
Right.
put it on the market. You could
And
settle in
settlement
August.
at all. Yeah.
You
end
can
of August.
settle, but let's get it up on the market. So August 31st, we're not hit with 100 homes coming onto the market.
Yeah.
Do we have the buyers still here? Absolutely. The buyers are still here. Interest rate has not really affected our market, knock on wood. But we are seeing those things. The other thing that we're seeing is before February, we were lucky if we had 1 or 2 homes a week on the market, right? So we would talk, a home would come on the market, we would all text one another, did you see this new house?
Yeah.
And we would call all of our
And then
buyers
we'd all go through it.
and we'd all go through it. We'd call our buyers and we'd be like, one house came on the market, but every other agent was doing the same thing.
Yeah.
So it was going quickly. Well, right around Super Bowl, we started seeing 1 home a day on the market. Then we were seeing 2 homes a day on the market. Now we're seeing 2 to 3 homes a day come onto the market. So the oversaturation is starting. So again, we're not saying the market is plummeting. That's not what I'm saying. I'm saying that the amount of inventory is going up. So if you are thinking of selling your home, it's changing. The tide is changing. It's to become more of a buyer's market. Now is the top of the market. Now you're going to get your highest price for your home in the next, I'm going to predict
Yeah.
at least year, right? Because
Yeah.
ours
And it's so
kind of goes in
important
waves.
to price it right.
Oh my
Like,
God, yes.
Because if you're pricing it way above where it
Yes.
should be, then it's sitting. And
Yes. So I went on the listing event recently, and I had told the owners the price that I felt it would sell for. And another agent came in behind me and told them $100,000 more than what I had said to them. Well, it's still sitting on the market. That's not good. When your house sits on the market for a long amount of time, people think A, is something wrong with the house?
Yeah.
Or B, that it is a way ridiculous. Then they offer way less. Okay. Not a good marketing strategy. Not a good strategy. I guess not marketing. It's not a good
No, you gotta
strategy.
price it right.
You have to price it right. We here at Sotheby's, we're experts at this. We are knowledgeable of the higher priced homes. We are experts in the homes over $1 million, which is a large part of our market right now. Our raised ranchers are 700,000.
Yeah.
So, your newer homes, your bigger homes, your new construction is all well over $1 million. Here at Sotheby's, we have the marketing, we have the public relations, we have the connections worldwide to help you. We are the only luxury brand on the island. Okay. Other offices, which are great and respectable, have a luxury collection or a luxury part of their office. We are a complete luxury brand. What does that mean to the person that owns a little condo or a little cottage? It means that we bring luxury first-class customer service, have a team that is in place to make it a luxurious experience for you, easy, seamless. We're here to make it easier for you. And again, I said it before, I'm going to say it again. You need someone local. You need someone local. You need someone with an experience that can help you through this process, especially if you're talking about something that's over $1 million.
Yeah.
Look, if you have a friend that's in real estate, that's great. Come and consult with us. Come and talk to us. We can work with them.
We network with people all the time. I have agents that I've worked with in the past. They're from other shore towns, and I always network with them. We work together. And we here at the Shore House, we work as an entire team. So if you list with one of us, you get literally an entire team.
You really do.
Collaborate all the time.
Yep. And we also have, you talked about our network. We have our Sotheby's network. We have the network of people that we know. But in addition to that, we have a lot of pocket listings. Okay. We have a lot of owners that say to us, look, we do not want to put our home on the market. We don't want people walking through our home. It's the summer. But if you find someone in this price range, you're welcome to bring them through. Local agents, right? Because we're local agents, they tell us this. You're not going to get that from anyone else. It's not on the market. I saw you.
I know, because I was going to say, we have a couple of really, really great pocket listings.
Yep.
One specifically stands out. It is $2 million. It is stunning. When I tell you this property is stunning, and I automatically thought I have other agents that I work with, and other areas that they may have clients that would be interested in this property, and right away I just I network with everyone. So this property is beautiful.
Oceanfront.
It's not on the market.
Oceanfront
is something that we could sell.
Yep. If you're in that $2 million range, give us a call. Again, we also have a lot of people that we can call. So for example, we're working with some buyers right now that specifically want Coquille Beach. So we are going through our database and we're calling all the people we've ever sold a Coquille Beach to, which in 20 years, between all of us, that's about 10. So we are calling all of those owners and we're saying, hey, have you considered selling? Would you consider selling at the end of the summer? We'll put it under contract now. You could settle September 15th. So a lot of advantages for working with a local realtor, a lot of advantages to working with us. Plus, we're kind of fun and cool to hang out with.
I say my clients become my friends all
They
the
do,
time.
yes.
They do. I
Yes.
love them. I stay in contact with them, and
I got a new one the other day. One of my clients, a new client, a client I just sold a house to that I've known for a while. She called me and she said, "Are you a member of the Elks?" I said, "Yes, I am." "Why?" She goes, "Would you sponsor me?" I said, "Sure, no problem." So I was telling a guy down at the Elks and he goes, "Oh yeah." He said, "Back in the day, all the realtors used to use that as a selling point. If you work with me, I'll sponsor you with the Elks." We're happy to help you with whatever, it's not just the Elks, but we are here.
Yeah.
We have keys for a lot of the properties that we've sold that we keep on hand in case of emergencies. They're locked up here. But let's say you drive all the way down here from New York. And when you get here, you're like, I forgot my keys. We have copies of many keys here that we keep, again, locked up. But we are here if you need us. We are here on the weekends. We work Saturday and Sunday, mostly Saturdays.
We live here.
Yeah.
So we are always here. And
Our kids go to school here.
our kids go to school.
Yeah.
And I tell my clients, look, if you are in New York, North Jersey, Pennsylvania, and you come across this property and you just can't get down here, well, Maria and I, we often do video walkthroughs.
Yep.
Let me go check it out for you. Let me
Yep.
look into it. Let me get more information, more details.
Yep.
And I don't think everyone can provide that kind of service.
Correct.
We on the island can.
Correct. And we can also, between all of us, like hop over. If you're in town and you say, we don't love it, but if you're in town and you're like, I saw a property, can you show it now? Usually one of us can easily come and meet you. Again, we love some heads up. You know, it would be nice because then we can actually sit and spend time with you.
Well, we have
But-
kids.
Yeah.
We have,
We have lacrosse.
Lacrosse.
We have crew,
crew,
football, right? Like
Yep.
everybody else. We say we're in it.
a 1-year-old puppy that loves to get walked all over the island. You might see her all over. Kaya,
She's going to be on the cover of our
Yeah.
next magazine. Again, the first person that comes down and says they saw us gets one of our free magazines. Come on down, $20 value. If anyone on our magazine, you could get it online, livelovebrigantine.com. This is an exciting new marketing piece for us because as a team, we were spending a lot of money on different ways to market everything that we do, and it was spread out. So now we decided to put it all into one book with all of our team
Yeah, we'd
members,
love
our
to get-
mortgage people, our title people.
you're added here.
Yep, we have a nice article on the triathlon
Yeah.
and the events coming up in 2024. We do have copies of the directory here if you'd like to come down and take one. Why you need a local real estate agent, we just spoke about that. We have our favorite picks, things that we love on the island.
My investment property that's still available.
Why don't you talk
This
about
is
that
great.
a little bit?
Well, it's a quadplex. It is just down the street from the private members club, Sirens, two
In
doors
Atlantic City.
in Atlantic City. It's
Yep.
on Carson Avenue, 421 Carson Avenue. We still have 2 units left. They're amazing. Water views from every window. Reverse living. So it's 2 bedrooms, 1 bath, washer, dryer, decks on the lower level. You go up the steps
So
and
nice.
it's all open.
So nice.
$1 million views, and these 2 units each are listed for $295. So under $3,000, brand new construction. This is the view of the property from the water. Just a really, really great location. And I can't stress enough what a great investment property this is. The master deed allows for short-term rentals, no less than 3 nights. So someone can buy it as an investment property,
Right.
use it whenever you're using it, and then rent it out. It's
Here's the other thing,
an
right?
option.
If you have a boat, you could dock it over at the Golden Nugget,
Mhm.
right? We tell people that all the time. They say, we have a boat, we don't know where to put it. You can dock it at the Golden Nugget. You get 10% off everything at the Golden Nugget. You get emails when they have like extra for stuff. So they
Mhm.
have those, what are they called on Fridays? Flashback Fridays.
Yeah.
So if they have a band coming in and it's not sold out, they'll send you tickets, in your inbox. So again, well worth
Yeah.
it if you have a boat. It's
Have a
just
boat.
very close to this condo. And again, like she
Just a
said,
great location.
The views are amazing.
Yeah, just such an energy down there.
Yes.
You're right on the water. The
Yes.
Coast Guard station's directly across
Yes.
from you. It's great, and
Yeah.
I think a lot of people don't even know. Here's what you like right there.
Yeah, those little mokes. The
Um,
moke just drove by.
People don't even know, aren't even aware that Carson Avenue is down at the very, very end of Massachusetts.
Right.
So
Right.
check it out. 421 Carson Avenue, 2 units left, $295 each.
That's right. And we have another condo here on the island over at Dolphin Cove. It's a little 1 bedroom, 1 bath. It is absolutely adorable.
Can I just talk about that?
Yes.
They are the best kept secret.
They
They're
really
amazing.
are. They really
I
are.
have clients buy one. They absolutely love it. It's their ability to be here in Brigantine. They've always wanted to be in Brigantine. They have a beautiful home inland, but they wanted to be here on the island and not drive home at the end of the day, and they bought it. And you know what? It's a great option for people that want to get here onto the island and live the
life.
the life. Yeah.
I think the best thing about it is that pretty big. They're like
Yeah.
700 to 900 square feet, depending on the model
They
that
have
you
a
get.
full-size, beautiful kitchen in
Yes,
there.
it's not small. Like when you think condos, some people think like a motel convert, which we have them too.
Mhm.
But Dolphin Cove is really 700 to 900 square feet, depending on the unit, because they're all a little different. But the one that we have for sale is remodeled. It's in a great location. It's one court over from the pool. It's in F. So you have the pool, you have the tennis courts over there.
And pickleball courts.
Pickleball courts. Who plays pickleball? I do not.
I do not.
I do not.
I have a set. I am going to try, but they have pickleball courts.
I think I'd look ridiculous trying to
We
play
should,
pickleball.
we should do it.
We could try.
We should try.
I'll try. I'll give it up to try.
Maybe we could do a live.
We could go live from the pickleball courts. What do you think? Do you want to see live from the pickleball courts? Keely, can you put a comment on there so we can make sure it's working? Because I didn't see anything. Again, we're here for any questions if you want to ask. Just want to let you know that since we started at 10 a.m., it has gotten very lively down here.
Yeah.
A lot of people walking by now, a lot of cars
Lots of
going by,
traffic.
people waving to us, which is
Like
absolutely
traffic,
great.
foot traffic,
See you.
car traffic.
Yep, a lot of stuff going on at the shore. And like Joanna said, if you can't get down here, but you want to see a house, we can do a video tour for you, video walkthrough. We're happy to do that.
Yeah, I do that.
Yep.
For clients. And I tell them it's really important to, if you find something, have me take a look at it.
Yeah.
Let me walk through it, because sometimes it looks great, when you're clicking through the pictures, but
Right.
it's something, maybe not exactly what you're looking for. It kind of, show you exactly like through a video tour.
Right.
The location or
Yeah, sometimes the
interior.
pictures look better than the
Yeah.
places,
Yeah.
fortunately and unfortunately, right?
Yeah.
We did tour another property yesterday that was not one of our listings, but we wanted to tell you a little bit about it. It is a 2-bedroom, 1.5 bath, small cottage.
Adorable.
Adorable. Stone's throw from the beach.
Mhm.
And they're asking $615,000. So any of you out there looking for a condo, because you can get a 2-bedroom condo here for $550, $575, right?
And you can walk to the beach.
You can get this little cottage with a front porch, a fence backyard
Yes.
for the 4-legged friends.
Very nice backyard.
Yes. And walk to the beach and no condo fees.
Outdoor
So,
shower.
Yes. So if anyone is looking at condos, give us a call. We'd love to show
Yeah.
you this house. It's a friend of ours' property she's trying to sell in a great, great location.
I
And
love tiny homes.
I know.
And so to me, this is like this adorable little
so
cottage.
Cute.
Yeah.
So cute.
Cottage at the shore.
Yep. And it's just perfect. Like she says, she comes down and she just, all of her worries melt away when she sits on her front porch. Beautiful breeze.
Yeah.
We were in there with the windows open and the breeze was just coming through. It just redone.
Yeah, there's nothing
remodeled.
like that breeze.
No,
Like,
the kitchen's been remodeled.
Modeled.
The bathrooms have been remodeled.
Mhm.
The floors are new.
Yes. I think she said an interior decorator helped remodel
Correct.
the bathroom.
Correct. It's just adorable.
It's
So
adorable. Washer,
again,
dryer.
not our listing, but give us
It's
a
so
call.
cute.
We're happy to just say the cottage you spoke about. We're
Yeah.
happy to walk you through or do a video walkthrough with you. I don't know. Anything else you want to talk about?
No, I just wanted to, when we brought Jim on, I wanted to say how important it is to line yourself up with someone that has knowledge of, like, has an A team, and
Yeah.
Jim is definitely very knowledgeable
Yes.
in what he does, and our
Yep.
team is great. We've got,
Yeah.
you want to introduce our team again? real
Yeah, we
quick?
have Joanna Driscoll, who's here with me today. We have Celeste Smith, who I think is in Florida right now. Celeste,
think
if you're
she's in
watching, we're very
Florida.
jelly. We're a little
Yeah,
jelly.
Celeste.
Little jelly, Celeste. We have Bridget Cusimano, is she in Texas?
She's
or
in
is she
Texas.
back
I
in-
think she's in Houston.
Yeah. See, we travel. We are truly international, let me tell you.
She's our wine connoisseur.
That's right. That's right. And we
Mhm.
have Amy Walsh. Amy Walsh is one of our wonderful agents with tons of experience.
Yeah.
We just got a new agent, Melanie Gallagher. She just started. She's not a new
She's
agent, but
great.
she's new to us.
Mhm.
She's originally from the PA market and had a second home down here and moved down. And she's beautiful. She's wonderful.
Yeah, she's so sweet.
So sweet. She just started with us. And then we have our amazing administrative assistant, Melody Conklin, who, if it wasn't for her, we wouldn't get anything done. And right now, we actually have our intern back from last year, Keely Calloway, who is monitoring and doing all this. See how much better it is this week than last week. We didn't have Keely last week. We have her now, which is excellent. So thank you, Keely, and everything that you're doing. And our office partner, Matt Cusimano from Cusimano Builders, he couldn't be here
He
today.
can make your dreams come true.
He's going to come on probably, once a month, once every other month, talk about new construction. In our magazine, he does a circle each month. I still, we're in the office with him every day, and he still just amazes me with some of the things he tells me that I don't think about when you're buying new construction. A lot of what's happening right now is people can't find the home they want. They can't find exactly what they want. So you're going to want to talk to Matt, think about building. If you already own a home and you're like, it's not quite for me. Maybe you could talk about knocking it down, raising it, put an addition on it. And I have a little secret I want to share. Matt's newest project has broken ground. We have 4 Franklin, but he just had another design for a smaller property, 2,000 square feet,
Wow.
which is like a floor and a half. So for
I
someone,
love those smaller
right?
properties.
So we're seeing a trend. People want to go back to the smaller homes. They don't want the huge homes, and we are on top of it. Matt's on top of it. So his new design, you're going to see it in our next magazine.
That's awesome.
Is a 1.5, which means you have 1 floor with your, I don't remember, 3 or 4 bedroom, but your bedrooms, your bathroom on the floor, the kitchen, the living room, and then a half of a story, which has a master suite.
Wow.
Decks on the top, decks on the bottom, garage underneath, brigantine basement underneath. You have all of this space and a little bit of a smaller home, 2,000 square feet. Again, why not?
Yeah.
Who wants to clean? Who wants to clean a 6-bedroom house at the shore? If you have a smaller family, you don't want to clean 6 bedrooms.
No.
When you're
Or your kids are going off to college, and you're kind of thinking you're going to move down here and stay here, and that would be a perfect home.
Exactly.
For someone like that.
Right. So you heard it here, guys. You're going to see the new design coming out.
I'm excited.
He showed me a sneak peek on Friday. He said I couldn't say nothing, but guess what? I said something.
I need to look at
It's
that.
coming out. It's coming. So again, we're here for everything. And I just want to reiterate one more thing before we say goodbye. We are here to help you and consult you. Anything that you need, we are here to help. We are not selling you when we talk to you. Like I went and I met with someone who is going to use another agent. I still sat down, helped her, gave her some advice. We're working with another client who has another agent. Look, we're here to help you. That's what we're here to do. We know real estate. So yes, we can answer your questions. We'd love to sit down and talk to you. If you want a free analysis of your home, happy to do that. We say an analysis of your real estate holdings, because that's what it is. It's a real estate holding. Maybe you just want an idea of how much your house would be worth right now. We're happy to help. So that's it for today. I want to thank everyone for watching us. This will be played as a repeat show all week long with some little clips. We are here next Saturday. I don't know who's joining us yet. It might just be me and Joanna.
Maybe.
It might just be us, which is that the worst thing in the world?
No, this is fun.
While we were here, Dino from Atlantic Title Company came over, so maybe we could talk him in the car.
Oh, yeah.
He talks a lot, though. That'd be a 2-hour show.
Yeah. He's got lots to talk
He's got a lot to say.
Yes.
Yeah.
So before we go, I just want to say this real quick, because this happened to me a couple of weeks ago, most recently, because it happens often, but our administrator, Melody, is always available for us. And it is so important to have this, I call it the this A-team together, which we do, because I was out in the midst of showing properties. My client walked into a property, looked at me and said, I want this property, write the offer right now. I'm like, we have 6 more to look at. He's like, write the offer right now. I'll look at the other ones, but I know this is the one I want. Got on the phone with her. Before we were even done with our showings, an offer was submitted. We got it. We just work quickly that. And Melody helps out.
Well, we're full-time. This is not part-time for us. We are full-time. This is our livelihood. This is our career. We are here. Our admin is here. I have to say this. Sometimes you'll come by and our door is shut because we're busy and we're running around. You can always call us. Our team number is 609-264-6179. That is our direct team number. You can reach any of us. And on Sundays, we're usually not here after 2 because
right.
we spend time with our families. So we work by appointment on Sundays.
Mhm.
So again, we are here for you. Our website is shorehouseteam.com. On all of our channels, it's at Shorehouse Team. And please follow us on Instagram. We have to get over 1,000 viewers so that we can stay live longer. Are we still live, Kaylee? On
Yeah.
Instagram?
Wow.
See, Instagram likes us. Who doesn't like us,
Okay.
right? Why not? What's not to like? All right. Thank you so much,
Thank you.
everyone.